Hello investors and traders, today I'll speak about the stock market and stock market analysis. So let's start with the S&P 500. We see its current level is 3863. So yesterday we saw a slight decreasement in the main index, and of course the reason is the US banking crisis, a crash of some regional banks, and at the same time the expectation about the interest rates of the Fed fund rate is changes very sharply. Let's have a look on the probabilities here. So now the current target rate is 4.5 to 4.75%, and we have a next meeting in 8 days. For today it will be the 22nd of March. And look, the most investors and market participants expecting to see increasement about 0.25%. It's the probability is 58, but on the next one we may see that here the expectation that it will be the same, so no another hike. Remember, a few weeks ago we saw that very high probabilities that the target rate can be even 5.5%, 5.75%, but now it's totally different. We see the Fed flipped and here is the summary. So look, generally speaking, we see that now the current rate, and here the probability that it will stay in the same level is very high. We may see only a probability of hiking maybe till May. Then it's the probability of hiking is disappeared at all. And of course we may see here that the hike probability is very high only till May. Then we see that no change, or the decreasing of the rate may start at June, 3 months from now. So very interesting information. Really, the quantitative easing and the decreasing of the interest rate may start in June of this year. So it's very interesting stuff in my mind, of course. And here we see that, for example, in the expectations for the end of this year, for example, the highest probability, the highest interest rate is about 4%. So it's even lower than now. So we see that the Fed, the expectations are very volatile. We may see it in the next Fed meeting, but let's move back to the Nasdaq, the IT companies sector index. So here still I see the index a little bit lower. My target is it can be lower than 10,000. By the way, today we'll release the data about the inflation, the CPI, the core inflation rate, the PPI. Will release tomorrow. So anyway, today it can be another volatile day in the stock market. We see that the forecasts are that they see the inflation rate 6.1%. So of course, if the inflation we may see a slight decreasement, so maybe the Fed may continue to change its views on the Fed interest rate. Maybe they will tell, we see a calm down in the inflation rate. Maybe we shouldn't continue our interest rate hiking, and then they maybe will start easy their monetary policy. The oil price is now about $80, and I told you that I'm expecting to see it's higher. My target is it's higher than $100. I'm expecting to see the fifth wave. If it's an impulse, the first wave, the second, the third, and the fourth. Usually the third wave is the largest wave in the impulse. So here the probability to see it's higher is the Brent play in my mind is still elevated. The B2C is about 24,000, and of course, if we'll check the TLT, as I told you, my main investment for this year is the US Treasury bond, one of the safest asset in the whole market. So here I'm continue to invest in the TLT, the 20-year Treasury US bond. But in this case, we also receive a nice dividend, about 2.6%. So generally speaking, it's my view for today. And the last one, it's the VIX, the volatility index for S&P 500. Look, now it's the current price is 26. I can't tell that it is a crash or rush or something special happened in the market. Now it's 26. Look, and the Corona crisis, it was higher than 80 at the market crashing in 2018. It was about 50. So now it's only 26. Generally speaking, not something special. We saw it at the same level in the last few years for let me see if we are here. So 1 2 3 4 5 6 7 8 times. So it's not impressive at all. Just volatile market, what can I say? But the VIX telling us that there no any fear in the market still. So don't worry. I guess that the Fed I hope that they know what are they doing now. Anyway, I'm not now. I'm not heavily buying stocks. The Fed rate is still elevated. The inflation today, we will see the new data for the inflation. Let's have a look on it. On the data for the inflation historically. So look, it was higher than 9%. The last data is till today it was 6.4%. Of course, if today we may see inflation about 5%, 4%, maybe it can give a positive bounce to the stock market. Maybe it can be considered like a positive sign, but not sure. Also, we can see that inflationary impulse started here after the Corona crisis. It was April 2020, so it started here. So waiting today for the inflation data. We'll check any news about the banking sector, about maybe the Fed comments. And if you like this video, of course press the like button, subscribe to my channel, and see you on the next time. Bye.